Hi my loves, welcome back to another video. Well, it's finally Friday, and let me tell you, after this week, I couldn't be more excited with the fact that I will not have to deal with this industry this weekend. Today, as always, we will be looking at the freight market update and forecast for next week. Now, if you are new to my channel, welcome. I teach about the trucking industry with a heavy focus on the spot market as well as freight market analysis. So if this is a topic that interests you, feel free to subscribe down below. All right, so the market. Yes, it is absolute crap right now, but there are always better areas and worse areas. So let's go ahead and take a look at where the opportunities will be for next week. Ready? Let's go! Two quick announcements before we get into it. Number one, I promised you guys that every other Sunday I will do a live. So this Sunday at 4:30 p.m. Eastern, I'm going to be live, so if you have any questions, you know where to find me. The second announcement is more of a public service announcement. I have noticed that more and more there are scammers in the comment section pretending to be me. Now, they have a WhatsApp number. I don't know what you call it, WhatsApp. They have that number attached to the name with my profile picture. I do not have a WhatsApp, so this is definitely not me. I do delete these comments as fast as I possibly can, but please be careful. As always, these charts will be linked down below so you can see them better. I know it can be hard to see off of the board, but let's go ahead and get started with the general overview by looking at volumes versus rejections on a national level. For those of you who are new to this video, volumes show us how much freight there is in the market. Tender rejections show us how many contract carriers are rejecting contract freight, thereby sending it to the spot market. And it also gives us an idea of how many trucks there are in the market. But in general, tender rejections will give us an idea of which direction the spot market is moving in. If the tender rejection rates are going up, that means that the spot rates will also follow suit and start increasing. So looking at this right here, blue is volume, white is tender rejection rates. We can see that volumes have actually been kind of stable since the end of February. Whereas the tender rejection rates, yes, there are ups and downs, peaks and valleys, but realistically, since around the 15th of February right here, the trajectory of tender rejection rates is up. Now, even though that is wonderful news and it's heading in the right direction, the reality is, and we have to remember this, that even though the trajectory is up, tender rejection rates are currently at a measly 3.61%. And this basically means that out of all contract loads, 3.61% is getting rejected and therefore ending up on the load board. Now let's look at a more detailed view for equipment types. So on this chart, the blue line is the van, green is flatbed, white is reefer, and it shows us how much tender rejections increased or decreased since last week. And what we can see is that all three of them actually experienced an increase. The van was at about 1.2%, reefer about 1.3% increase, and the flatbed at 3.2% increase. And this tells me that rates will be going up next week. Now, does this mean that rates will skyrocket? Absolutely not, because the percentages are just way too low, but there will be an increase. Now, just to give you guys a view of how it works, this is the 7-day rate per mile for the three different equipment types. And what you can see is rates, they are increasing a little bit since the end of February right here. Reefer in blue, the flatbed is in white, and the van is in green. So you can see that they did experience a small increase because the tender rejection index has been on an upward trajectory. However, that increase is very minute, but still, I'll take it. At least it's going in the right direction. Now, if you're looking at this and thinking, okay, flatbeds are at an average of 3.02 cents per mile, reefers are at 2.69, and vans are at 2.36. If you're looking at this and thinking this is nonsense because these rates don't exist, well, you have to consider that this is national, so it is regardless of miles. There are a ton of loads that pay $3, $4, $5, $6 for a dry van that are like 200 miles paying, I don't know, $600, $700. So this is something you have to consider. Does it mean that you're going to be getting a load for $2.36 from Pennsylvania to Illinois? Absolutely not. Okay, now on to specifics. Unfortunately, again, as a reminder, I do not have this type of specific data for the flatbed. Sonar just doesn't provide it yet. But let's start with volumes for reefers. This map shows us volumes for the reefer, where they increased, where they decreased over the last week. Red means a decrease, blue means an increase. So what we can see is that the Midwest, you guys have all been commenting and emailing me what happened to the Midwest. We can see that volumes decreased here. Okay, this doesn't tell us about rates, but volumes did drop here, except for places right here in Iowa and Illinois. We can see that volumes increased a little bit in Idaho, in the Washington area right here. This is the Yakima Grandview market. Then we can see that on the east side, the southeast volumes increased a little bit, as well as Florida. And this is because of produce. A lot of cabbage is coming out of Florida right now. So if we take a closer look, we can see that the highest volumes currently for the reefer are in Ontario, California, where it decreased from last week. We have Joliet, Illinois, and then we have Lakeland, Florida. But again, I'm going to reiterate the fact that volumes do not tell us anything about rates. It's just showing us how much freight there is in these markets. So let's go ahead and look at tender rejection rates. And this map shows us how much tender rejections for reefers increased or decreased from last week. And we can see that there are some serious tender rejection increases happening in Idaho, in Oregon and Washington. We have it happening in Houston and parts of Georgia and Illinois. But if we want to see where the tender rejections are actually the highest currently, well, it's going to be right here. Number one, it's Bismarck, North Dakota at 25% rejection. It did decrease from last week. Fargo, North Dakota, and Spokane, Washington, but all of them decreased from last week. So the real question is, do you need to be in these markets because they have the highest tender rejection rates? Not necessarily, because they're on their way down. So let's take a look at where you need to be as a reefer next week. And I added some numbers here, which you will see in the charts if you download them as well. So this chart shows us the volume versus rejection rates, right? The volume is the height of a place. Rejection rates is the bluer it is, the more rejections are happening. And we want to be in a place where the volume is high and the rejections are high, right? That way you have good rates and a ton of loads to choose from. Now, from looking at this map, it looks like Idaho would be the best one. But if you look closely, yeah, the volume is there, but the rejection is only at 9.31%. The only two places that really stand out to me in terms of good places to be is Omaha, Nebraska, where the volume is 19.66 and the rejection is 13.61, and Fargo, North Dakota, this area right here. The volume is not really great there. It's 11.86, but the rejection rate is at 20. Whereas this part in North Dakota, I forgot what it's called. My goodness, I'm so sorry. There, the volume is just not there. The rejection rate is amazing, but basically what's going to happen is there's going to be one load paying really well. So basically, yeah, Omaha, Nebraska looks decent. Fargo, North Dakota looks decent. Maybe Sioux Falls is okay, but the volume is at 7.53. The rejection rate is there, but markets like Missouri, it's a good volume, but the rejection rate is really bad. Iowa is pretty interesting, 15.04% rejection, and the volume is 11%. So basically this area right here is where the rates will be the highest relative to everything else for a reefer. Okay, now for the dry van, starting with volume changes from last week, and there's no denying it. This map looks like I do when I stay out in the sun for more than 20 minutes. It is red, so we can see that volumes dropped across the board pretty much. There are some places where they increased, some random market areas, but in general, yeah, volumes dropped for dry vans. If we look right here, we can see that the highest volume is in Atlanta, Georgia, then in Dallas, Texas, and finally in Detroit, Michigan. But again, volumes don't tell us anything about rates, right? So let's take a look at the rejection rates. So I'm going to say it again. For those of you who have been emailing me and commenting saying that what happened to the Midwest, well, this is what happened. You can see it's all red. The rejection rates fell from last week in the Midwest, so the rates followed suit. We can see that the northern states is where the tender rejections did increase, and some southern states. This is probably because of the weather. If we look a little bit closer, we can see that the highest tender rejections happen in North Platte, Then we have Cape Girardeau, and finally Omaha, Nebraska for a dry van. So where do you need to be next week in order to grab better opportunities if you have a dry van? Well, you definitely don't need to be in a place like Utah, where my guy is going to end up on Sunday. Now, for those of you wondering, how is it possible that I have access to all this data and I still send them to really, really ridiculous places? Well, it's the human factor, isn't it? I'm a human being who panics, who gets stubborn. I don't want to take low rates, and sometimes I get greedy. So that's how my guys end up in less than desirable areas. Do these choices get me in trouble? Yes, absolutely. Do I learn from them? Yes. Do I make the same mistakes over and over again? Yeah, I sometimes do. I'm a human being. So basically learn from me. Don't let fear be the dictating factor of where and how you book loads. This is by far my greatest weakness. Anyway, back to the map. Well, we have Denver, Colorado here, where the volume is insane, but the rejection rate is at 8.86%, so not great. By far the best place currently for a dry van next week is the Omaha, Nebraska area. The rejection is at 15.03% and the volume is at 54.38. Another good market is somewhere here in Iowa. 10% rejection, 10.5% rejection, volume 32. And Wisconsin, 11.12% rejection and pretty good volume. But places like the Memphis market right here, I don't know if you guys can see it, the rejection is only at 7.86%. So the rates are not going to be that wonderful. Louisville is okay. Louisville, Kentucky, 10.04% rejection. Again, best place will be Omaha, Nebraska. Now on to the total trucks in the market. How many trucks entered or left a specific market area since last week? So from here we can see there's a lot of red. A lot of trucks left markets, right? There are some blue areas, specifically the Rockies right here and Texas and some random places, but this actually surprised me. I'm surprised that the trucks increased in the Rockies considering the weather. Maybe it's just the fact that everyone's trying to get a good rate per mile and going to these places pays better than anything else pretty much. But if you guys know what happened, let me know because I'm stumped. Finally, we're going to look at diesel prices. This is the actual diesel truck stop price per gallon. So what we can see is that while diesel is still going down, it's going down less aggressively at this point, but it's still going down, which is good. If we look at this chart right here, this is the first time in a while where we can see that since last week, there were some increases in diesel prices, the green right here. So Virginia, Maryland, Texas, Oklahoma, Arizona, and North Dakota all experienced a small increase in diesel prices. Everything else either decreased or stayed pretty much the same. What we really don't need happening in the already tough market is diesel prices increasing. So my 2 cents on the topic. Relatively better market areas are few and far between. So while there are some market areas where you will be earning a higher rate per mile than average, it's going to be very hard to stay within those market areas for long. Again, the issue currently is overcapacity. There are just way too many trucks at the moment. In terms of my plans for next week, well, currently it's a big question mark. I will use the data I showed you as a reference for next week, and I will do the best that I can. Whatever the case may be, I do not give up easily. I may quit this industry every single night, like I said before, but these 2 companies are my 2 babies, and there's nothing I won't do to protect them. Someone reprimanded me about a week ago for saying that I love Elon Musk on my last live, and the reason I adore him so much is because of what he did to protect his 2 companies and how he did it. Anyway, guys, I'm sorry, I just went off on a mini tangent right there, so it's time to reel it in. I hope that you found this video helpful. I hope you managed to pull out some information that is useful to you, and I will see you guys live this Sunday at 4:30 p.m. Eastern. See you then.